Nearing the midpoint of a tumultuous trading year, it may seem like all your investments, crypto included, are going up in smokes, and reaping high returns seems like a dream far away. So we know that the bear market is here, but what lies ahead for the world of crypto? Since the beginning of the year, the crypto market has effectively shimmied between 1.7 trillion and 2.2 trillion. With a correlation score of 0.72, these movements are significantly associated with US stock markets. This has grown even more evident over the last week as big cryptos like Bitcoin and Ethereum have seen comparable price movements. Bitcoin has crossed its monthly linear trend at 38,000, seeping down to 36,000 in terms of market dynamics. It normally takes a few days for such wicks to indicate whether there is a structural failure or just a variation. If there is a breakdown, the next step would most likely be the 28 to 30 level, which has traditionally provided good support. The previous time the markets traded in such a narrow range for such a long time was during crypto winter between mid-August 2019 to mid-January 2020, albeit the overall market cap was close to 6 to 10 times less at the time, somewhere between 0.19 trillion and 0.29 trillion. And we had yet to reach DeFi summer or NFT summer. Thus, the industry was likewise considerably less established. In the absence of these prospects, the primary use case for cryptocurrency had been trading, which was mostly done in spot markets at the time, since the future markets were only beginning to gain traction. But as time goes on, the picture becomes more complicated and less pleasant. Daily spot trading volumes have dropped to 7% of total market capitalization, down from 20% in mid-August 2019. And perhaps more concerning, despite the market valuation nearly doubling in the same time frame, spot trading volumes have only doubled. Though this figure shows that derivatives trading volume has picked up some of the slack, and there are days when derivatives trading volume has surpassed spot trading, keep in mind that these are often leveraged transactions. Now, while we're still a long way from newcomers opening 100 times leveraged bets to become rich, more skilled traders are increasingly using leverage to optimize their potential profits as well as derivatives to short assets. A simple peek at the Crypto Fear and Greed Index reveals market psychology, with the index mostly remaining in the fear to extreme fear range over the first half of the year. While the index is not closely aligned to the results, as the market declined during periods of greed in January and February, and there was a mini run-up in late March when the index was at extreme fear, it does give us a sense of whether traders are bullish on the market or cautious and may look to conserve capital or only make small moves at the margins. Well, now we are officially in the extreme fear zone. There has been a net outflow of 179,000 Bitcoin from Sexus since the beginning of 2022, with a matching substantial spike in Bitcoin addresses with a 1,000 Bitcoin balance. Despite the fact that significant players like MicroStrategy and the Luna Foundation Guard devoured Bitcoin in March and April, Bitcoin traders continue to withdraw their tokens from exchanges. Now, while this may be viewed as a hedge against uncertainty, it has a negative impact on market liquidity. Lower market liquidity reduces the likelihood of prices breaking through resistance while also lowering support levels. Now, surprisingly, crypto money flows have shown to be more diamond hands. YTD flows were modestly positive with a plus 270 million in inflows through April 28th of 2022, despite a total AUM of 50.4 billion. So this suggests that institutions investing in crypto funds over a longer time horizon may be less susceptible to short-term price volatility and have mostly hodled throughout this tough period. Lastly, when it comes to the derivatives market, since the beginning of the year, the funding rate for Bitcoin perpetuals has been exceedingly thin, with just a few days when it maintained above 0.01%. Open interest has also decreased by 20% since its peak in November 2021, indicating that traders are still cautious. However, financing rates remained mostly positive, possibly indicating that traders who are still in the market are still enthusiastic. As Bitcoin tests support levels, we'll be keeping a careful eye on this. So you might have heard of FUD, a crypto cliche, fear, uncertainty, and doubt. And it's an overused crypto cliche, but for the first time since Bitcoin was created in the wake of the 2008 global financial crisis, the crypto market is in an unfamiliar environment with considerable geopolitical and macroeconomic risks. Investors are trying to cope with a new economic reality that might get much worse before it gets better, with not even bonds functioning as a safe haven in these turbulent times. Take a look at the S&P 500 and other similar equity index futures to see where the crypto markets are heading each day. Hodling is a useful strategy in a down market, but you can also consider transferring a portion of your portfolio into stables to achieve gains or minimize losses. Now, if you decide to stay in the market, keep in mind that bear markets necessitate vigilance and survival. The order books are now quite low, so any rapid movements from huge whales might sway prices in any direction, and that's why we've been moving in a zigzag pattern for so long. If you have leveraged holdings, ensure you have sufficient margin and collateral to prevent being liquidated. Now, unless there is a dramatic shift in macro mood, such as the end of the Ukraine-Russia crisis, which appears improbable anytime soon, your safest bet is probably dollar cost averaging on assets you have high longer-term confidence in. Consider hedging your holdings as well. A tiny cost might help you avoid large losses. So how are you coping with the bear market? Well, we'd love to know. Share with us your thoughts and feelings in the comments below. And if you'd like to stay updated to all things crypto, make sure you click that subscribe button, turn on the notifications, and also follow us on Twitter, Instagram, and Facebook for all the latest crypto updates. See ya.